Andhra Pradesh government or special dispensation to be given to Bihar or special welfare schemes keeping Bihar and Andhra Pradesh in mind, maybe addressing the Andhra Pradesh demand for some sort of a refinery to be set up, or even transfer of BPCL, a partial ownership to Andhra Pradesh. These are some of the things that will definitely will see reflected in the coming budget.
The important macroeconomic point is that there needs to be a very clear continuation of this policy where infra investments continue to pump prime the economy. And therefore, I am expecting that on the basis of the last full year budget, I'm not talking about the interim budget, which I think was just a holding operation. As the last full year budget had allocated 10 lakh crores total outlay for the infrastructure sector in the union budget. And based on those trends and based on the macroeconomic requirements, I am actually hoping that the finance minister allocates 13 lakh crores this year.
I would hope that the budget would think of certain structural mechanisms to address these concerns. I mean, I think we need much more oversight on safety. We need much more oversight on looking at the design, looking at the construction practices. So I think some or a significant part of the budget needs to focus on this.
This is going to be a very important budget because in the interim budget, the Honorable Finance Minister had made it clear that the budget that would be presented in the next term would really lay out the roadmap for Viksit Bharat, which the Honorable Prime Minister has set out as a goal for his government and for India so that we can have a developed country by 2047. The roadmap for this is going to be laid out in this budget.
I think the government is in a very, very comfortable position. You will be in a position where you can reduce the fiscal deficit by 1 lakh crores or even more, because 1 lakh crores is just what the excess which RBI has given. There will also be money coming from other public sector financial institutions. That's one. You could also be spending it on social welfare schemes. Third, you could also be giving income tax concessions, something which is required if you want to spur consumption and savings. It will not be a big amount, but something which is definitely required.
I think there's also an underpinning of the tax buoyancy which is coming through with the finance minister, which means that the government's tax collections over the last year have been quite robust. And therefore, a number of reforms that took place in the previous years are showing results which are enabling the fiscal space for the government to be able to be more considerate towards the taxpayer community.
What's your own sense? How much of coalition dharma is likely to impact the first budget of Modi 3.0?
Thanks, Siddharth, for having me here. Let me say at the outset that the coalition politics that you talked about will definitely have its imprint on the budget philosophy that is being executed, will be executed next week. There is no doubt about it. But let us understand also these coalition partners' economic philosophy, which are not very different from the kind of philosophy that the Modi government has been following. So I think apart from some allocation to be made to the Andhra Pradesh government or special dispensation to be given to Bihar or special welfare schemes keeping Bihar and Andhra Pradesh in mind, maybe addressing the Andhra Pradesh demand for some sort of a refinery to be set up, or even transfer of BPCL, a partial ownership, to Andhra Pradesh. These are some of the things that will definitely.
Warm welcome to Business Today Television. This budget day, I'm Siddharth Zarabi, and with me my colleague, the editor of Business Today, Sourav Majumdar. You're watching Modinomics 3.0. Just about an hour left for Finance Minister Nirmala Sitharaman to present her 7th Union Budget, a record, as well as the first budget of Prime Minister Narendra Modi's third term. Lots of expectations as far as this budget is concerned. What will it do for the implementation of the Viksit Bharat 2047 vision? How will it boost sectors of the economy that need support even as it maintains fiscal discipline? What about the demand for changes to income tax as far as individual income taxpayers are concerned? What about many other demands that have come up in the run-up, including the political demands from states like Andhra Pradesh and now even Odisha, in addition to Bihar? On today's budget special coverage, I am joined by several guests. Sajjid Chinoy, the Managing Director and Chief India Economist at JP Morgan. Very warm welcome to you, Sajjid. Thank you for making the time. Abheek Barua, Chief Economist at HDFC Bank. Always a pleasure to have you with us. And Shankar Aiyar, Political Economy Analyst, author and columnist. I will come straight to Sajjid with that one question. Set up the macro backdrop of what the budget should really be all about as far as India's economy is concerned.
Thanks very much, Siddharth. Good to be here. So I think the macro backdrop is one where there are a lot of encouraging signs over the last 18 months where you've got 3 or 4 autonomous growth drivers that have come together, right? We're seeing the government's doubling down on infrastructure. We're seeing the housing cycle, unlike China, pick up in India. We're seeing banks, balance sheets are the healthiest in a decade. So credit growth is running much above nominal GDP. And you've got, service exports that are doing very well. So that's why there's this excitement, because you've got these different autonomous drivers. Now, what's the challenge ahead? It's the fact that a lot of the heavy lifting has been done by public investment in recent years. And given fiscal and given debt constraints in the coming years, the public sector will eventually have to recede. And that investment will have to fall on the private sector's lap, which is something the economic survey, I think, repeatedly pointed out. Now, the question is, what is the binding constraint over there? The good news is the supply side constraints over the last decade, high levels of leverage, stressed balance sheets are behind us. Corporate balance sheets are very healthy. And in my mind, the constraint goes back to demand, right? It goes back to pushing up those utilization rates above 80% so that there's a trigger for more private investment. Now, this won't be easy in a world in which China is sitting on massive excess capacity. And that excess capacity is being exported, that deflation is being exported right around the world. And India is no exception to that. So the challenge before the budget is, how do you in the near term reduce deficits to ensure that debt remains sustainable over time, and yet sow the seeds for more structurally boosting demand? This will mean, what can we do on employment? What can we do on making our economy more competitive so that over time, both private consumption and exports become more durable sources of demand? When the private sector sees consumption and or exports picking up, then you have an incentive to invest, and then you get into a virtuous cycle. The last thing I'll say, Siddharth, is I think compared to February, however, the government's entering this budget with enhanced fiscal degrees of freedom. There's about 0.5% of GDP in revenues, RBI dividend and tax revenues that the government had not envisaged back in February. So you're in a sweet spot here where in theory the government can increase expenditures, possibly cut taxes, and further reduce the deficit. So you've got that extra 0.5% to play with.
Abheek, I want to come to you and then get Shankar and Sourav in as well. Sajjid spoke about that sweet spot and some extra headroom available. Is therefore the government's challenge not to raise revenues because public demands that it at least lower certain taxes?
Well, there's always a public demand to lower taxes. I think that's the nature of public. But I mean, there are other, there are various, expenditures to be accommodated if we look at it from a political economy perspective. Some of the states who are where the state governments are allies at the center are demanding transfers, whether that'll be a large one-off transfer or Whether it'll be in bits and pieces, one doesn't know. But I think there are a lot of things that need to be accommodated, and not stray from this path of providing support to public investments until there are more definitive signs that private investment picks up. So I don't think the additional sort of headroom created by the large dividend from the RBI and a couple of other things necessarily sort of dilutes the case for aggressive revenue mobilization, and that means that the degrees of freedom in cutting taxes is limited. And broadly, our tax GDP ratio is low, and we'll have to sort of keep working towards it. A lot of it depends on the efficiency of the tax collection mechanism, but rates do play a role. I think if I could sort of just add a little bit to what Sajid was saying, and I absolutely sort of concur with his diagnosis of the macroeconomic situation and the challenges going forward. I think one of the things that the economic survey yesterday brought up, and here are some of the more difficult trade-offs that are involved in going forward, is how we treat China. There are, the political issues, security issues. On the other hand, on the one hand, on the other hand, you have this problem of, not being able to, with China sitting on very large manufacturing capacities. If you don't kind of plug into the China supply chain and kind of stay away, how much traction can you get on exports?
Okay.
So I think there are very, very difficult, choices to be made going forward. Maybe the budget will not address all of this. After all, it's sort of a bit of a short-term fiscal document, but it does have sort of a vision that it invariably presents. And I hope some of these difficult challenges are kind of alluded to, at least in today's budget.
Sourav, the point that Abheek makes, that he hopes that the government does not stray from the path of driving capex to lift the economy. You agree with that? And the signs from private sector investment growth, do you think we'll hear Nirmala sort of indicate the roadmap where the heavy lifting is not only done by the government of India?
Well, Siddharth, if you see what the economic survey said yesterday, clearly it talks about private sector now having to step in more and more and more across the chapters. Across chapters, it talks about the private sector and its role. Having said that, I think, like Abheek said and Sajid before him, I think there is a certain leeway which the finance minister has in terms of giving, striking a balance between capex, which I don't think, if I remember the finance secretary giving us an interview in the magazine not very long ago, where he said it's probably, reached its peak, how much heavy lifting the government can do. Yes, because, there might be a little more, but I don't see. So there, and the leeway will probably have to be now looked at in terms of some welfare spending, the revenue expenditure side. So that is the deft balance. And remember, Siddharth, it is not a usual context. The budget is not being placed in a usual context. Here is a coalition government now, and there are pressures and pulls you and I are both aware of. So that is also a context which this budget will have to be mindful of.
Let me take that point to Shankar. Shankar, just a day before the budget, we heard from sources in the ruling establishment about how there is no concept of a special category that is left anymore. And we heard from the sources that no additional states are currently being granted special category status because the Constitution of India does not provide for such categorization. This is indicative because it just comes in the run-up to the budget. The broader question, Andhra Pradesh, Bihar, Odisha and their demands, do you think Nirmala Sitharaman and Prime Minister Narendra Modi are going to use the budget as an opportunity to address them, or will it be left outside of the budget to tackle?
Well, the budget is basically a document of pious intent. I don't think the government needs to sort of specify on this aspect. I think they will take the committee approach, and then there is the Finance Commission to offshore the issue to. While the government might say that there is no such categorization of special status, the Andhra Pradesh government is walking around with the document which they say it has some leverage on, which is the reorganization of it. Now, all of this conversation will happen till November, till the results of the next 3 assembly elections come, Siddharth. And that is where, as they say, the FNO market will open up and the hedging will sort of be called. Put and call options will play into the market.
Shankar, Shankar makes this interesting point of F&O. You brought that in because I wonder, Sajjid, if we could come to you. The economic survey also made that point. The RBI and the SEBI have made this point about F&O and the risky bets that are being placed. Is there a broader message that is being sent out at the economy level by everybody concerned with regard to the markets and valuation?
I think the message, Siddharth, is that the economy has spent 10 years repairing balance sheets and the excesses of the last cycle, right? So it's taken 10 years for the economy to clean up bank balance sheets, for credit to start flowing again. Reserves have been built up. The current account deficit is benign. So we've really had to work over the last year to kind of institutionalize this macroeconomic stability. And the job of a regulator, of a central bank, is to take away the punch bowl before the party starts. So I'm very glad that this is being flagged repeatedly, because you don't want to reach, if it's idiosyncratic risk, it's one thing. But if it reaches a certain size and volume, then we've seen from the last 20 years globally that the spillover effects can be fast, can be uncertain, and can be places you least expect. So I think it's important to, disincentivize this behavior. We don't want a situation where, having worked so hard, you've got excesses building up in parts of the system. And the issue here is what the world is seeing is very often these risks are offshored away from bank balance sheets because the better regulated parts of the system are very closely watched. Yep. And then this goes on to, NBFCs or other entities of the system. So I'm glad that there is a unifying voice here that when we see a buildup of risks, we need to act on it pretty quickly.
As Sourav comes in, he has a question for Abheek. I just want to try and bring up the markets at this stage. Quick look at the markets. They remained more or less flat because there were some concerns that had built up perhaps on account of any possible changes to capital gains treatment. We haven't seen any concrete information in that regard, but of course we are counting down and literally now just 40 odd minutes away. Sourav, step in.
Abheek, I just wanted to lob that same question to you about how much leeway will actually the finance minister use in terms of the RBI bonanza which she has got, the tax buoyancy, the tax collections having been better than expected. What are the things you think she will do in this budget in terms of propping up consumption demand and also trying to ameliorate rural distress?
Well, I think very clearly there is room for more welfare spending, and either in existing programs, increasing allocations. For instance, if you take the support that that the government gives farmers, which is just 6,000 rupees a month, I think there is a strong case, given inflation, given the increase in agriculture inputs, to increase that. I'm sorry, I said 6,000 a month, it's 6,000 a year. So, I mean, you can do it through existing schemes, you can sort of bring in new schemes. And I think the need of the hour and for the foreseeable future is, better quality spending and more allocations to sectors like health and education. I think we are running into a huge supply constraint in terms of effective labor inputs. I mean, we have a lot of people around, but they're not necessarily skilled. And as the economic survey pointed out, they are becoming, some segments of the population are becoming more unhealthy. So, that's something that needs to be addressed. So, is welfare spending, particularly in the farm sector, and in addressing skilling, where we do have a problem with youth unemployment. And then, public spending on capex, etc., might have peaked, but you have to keep the engine going, even if it's not rising further very sharply, because private investments are, my sense is that it's not they're not going to pick up immediately. There's still some way to go. Sajid mentioned a number of 80%. I think the RBI's measure of capacity utilization indicates about 76%, and that too dominated by two or three sectors. So we do have a way to go. So it's got to be a prudent thing, and I believe that I think Shankar alluded to the fact that it will be the special status, etc., would be left to a committee and so forth. I think, given my very limited understanding of politics and political economy, there have to be some allocations in this budget. I mean, I think the allies need to want the dominant partner to show them the money, and some allocations will have to be made in the budget, maybe through existing programs where a larger share goes to some of these states. We've seen this in the case of railways, if you remember in the past, where the railway budget was used to make allocations, disproportionate allocations to certain states that had a political claim on it. So, I mean, that's the way it'll go, I think.
Sajjid, can the government reduce its expenditure at this stage? This might be a counterintuitive question at this stage and given the build-up, but I really want you to tell us whether that is at all in the realm of possibility.
Siddharth, are you suggesting that they reduce the deficit even more than was planned in February?
Yes.
By cutting expenditures? I think that's possible. So there are 2 points here. One is, what does the fiscal math allow, and what does the economy demand? So I think the fiscal math allows you to, in theory, take that deficit even below 5.1 and increase expenditure and cut taxes, because you've got 0.5% of GDP. So in theory, I can increase my expenditure, I can cut taxes, and simultaneously reduce the deficit. Now, I think on the fiscal front, we have to acknowledge that it's important to reduce the deficit, but not too quickly. The fact is, last year, the deficit, we did a significant consolidation. The center's deficit went from 6.4% to 5.6%. That's almost 1% of GDP, more than was envisaged. So while we all agree that deficits need to be lower in the medium term, the economy, still has some catching up to do, given its pre-pandemic path, given the fact that we need private sector demand to fill in more fully. I think it's important not to consolidate too quickly. So I think 0.5% of GDP, maybe a little bit more, is kind of what the doctor ordered at this point in time.
Okay. Before I go to Shankar and Sourav, I just want to take a look at the markets. Most indices in the red. Now, is profit being booked ahead of the budget speech? Because there was a pre-budget rally, and we've seen there's a significant move that has happened a majority of the times post budget speeches. But there you have it, the Nifty down just about 50 odd points. Take a look at the Bank X, you will see a similar kind of red, the PSU indices. So we are seeing overall, Sourav, Shankar, that the market's a bit nervous at this stage, but there's no sharp fall, and perhaps 11:05 onwards is when you will see the counters react. Shankar, very quickly to you, and I press on with that point. India is, everybody says, Sajjid has written, Abheek has written in the past, that India is now at the cusp of a very long cycle of growth. And by the way, even as I say that, the first green that I'm seeing is the Nifty FMCG. So does that tell you something? But Shankar, a long cycle of growth ahead. Is today's occasion the right one for the budget to outline a strategy for implementation of that Viksit Bharat slogan, Shankar Aiyar?
Well, they've pretty much done that in the interim budget, in the sense of how they're going to take it forward. So there is, the economy will be sort of ring-fenced by public investment, and we have had a very robust public investment program. Even in the interim budget, it was 11 trillion rupees. So that has been done. What is not visible to keep the growth growing is the action on the factors of productivity, which is land, labor, which is at the state level, the issues of skilling and the education. That's why I was going to say that what I'm looking for in this budget is you could have the finance minister making everybody happy by giving out some money to the taxpayers, some money on welfare, and even though fiscal hawks will be happy if she sort of nudges it from 5.1% to 5%, which is entirely possible given the bonanza of almost 1.5 lakh crore or 1.5 trillion that they're sitting on. The question is, how imaginative can you get?
Okay.
And how can you lay? What are the issues that you can expand on? There are only so many roads and railway lines that can be done in a year. I'm not saying even for a minute that we have enough roads. We need more roads, but the execution capacity of the economy, the absorption capacity of the economy is governed by the statute of limitations. So
Okay.
you have to think about that. So what is the imagination? So I had suggested, for instance, that you could look at new cities. I mean, all the urban
Okay.
habitats are shot to hell in some senses.
Okay.
So I will be looking for some imaginative ideas in this budget to take a point further to the Viksit Bharat journey.
Okay, we seem to have lost Shankar there. One last question to Sajjid before I let him go. Sajjid, once the budget is done and dusted, will the key point be the cost of money and what the RBI chooses to do in the days ahead? And how do you think the budget announcements and the fiscal strategy is likely to impact the RBI's thinking?
Yeah. I think we need to be kind of cognizant of the broader point here that cyclical policy, both fiscal and monetary, have done a lot of the heavy lifting, Siddharth, as we've discussed over the last 4 years, right? That the RBI slashed interest rates in the pandemic, real rates were negative at that point in time, fiscal widened sharply. And I think, as the economic survey pointed out, we're living in a far more hostile global environment than we sometimes imagine. I think global inflation is going to be stickier. Interest rates are going to remain elevated. We've got a lot of geopolitical risks. We've got a US election. In that environment, I think it's important for India not to be adventurous. The fact is the monsoon is now catching up, but there is still food inflation remains a consistent risk. It's almost 50% of the basket. So I won't be surprised at all that the RBI is doubling down to bring inflation close to 4% and keep it there. So I think we should not expect any kind of monetary easing just as yet. Just as the fiscal needs to consolidate and ensure that debt is stable, I think the RBI needs to ensure that its primary mandate of keeping inflation low and stable is fulfilled. So we have to now look beyond these cyclical levels to what are the structural reforms that India can pursue, not just in the budget, but beyond that to boost consumption and exports. I think that's the larger thing to look forward to.
Absolutely. And Sajjid, we'll come back and try and come back to you as we take this theme forward post the budget. Thank you very much for your time. At this stage, let me welcome Sunil Singhania, the founder of Abakkus Asset Managers. Welcome, Sunil. There's some amount of red on the screens. Before I kind of get into a macro question, for those of our viewers who would like you to offer a spot assessment of how the markets are trading ahead of the budget.
Good morning and thanks for having me. I think, obviously in the run-up to the budget, actually we are having a very quiet market. I don't know what to make out of it, but I don't think there is anything extraordinarily positive or negative that is expected out of the budget. And we have already seen a very decent rally since the elections, So I think the markets are just sort of consolidating at these levels. I don't see anything which the market is making of the likely trend post the budget.
Sunil, overall, they've fallen from the opening highs. Benchmark indices are nearly 1% off. But the big question, and Sourav and I were discussing this earlier as well, is how would the markets respond and react to any possible changes when it comes to capital gains taxation? You've seen the kind of commentary by the regulators, the economic survey, expressing certain concerns. Are the markets being prepared for some sort of tax-related interventions, Sunil?
So I think all the speculation and what will happen if this happens and that happens, I think we should not get into it because no one knows what is going to happen. So from our perspective, we are very clear, take things as it comes. However, I don't think even the economic survey spoke anything about not investing in equities. I think the only thing maybe they were bothered about was more on the speculative front rather than on the investment front. So I don't think we should make two and two and try to come to any conclusion before the budget. Anyway, we are only half an hour away. We'll know what is going to be the trend. But yes, I don't think markets are expecting any significant changes, and therefore, if it does happen, both on the positive and negative side, we might see the markets react. But at this point of time, I don't think either we or the market is expecting any significant changes.
Sunil, I wanted to ask you, from a market perspective, no news is often good news. Most of the time we've seen that if there is no negative news, the market reacts very positively and, well. What is the best thing you think will happen for the market? What is the best thing the finance minister can do which will be good news for market experts like you?
No, so you're right. When no news is there, it's normally bad news. It's normally good news. The only thing is that if there has been an expectation of bad news, then no news is good news. I don't think there has been an expectation of bad news. So I don't think no news is going to be significantly good news. We would have a status quo. Frankly, our view is that this budget is going to have very little impact on the market per se. Because as I said earlier, I don't think the market is expecting anything significantly positive or negative. From a market perspective, 2-3 things which it's well sort of talked about. One is fiscal prudence, and second is the path towards growth continuing. I think the Prime Minister yesterday at the opening of the budget session clearly reiterated the fact that the government is clearly looking at continuing and in fact accelerating the path towards growth accelerating. And therefore, I'm sure that this budget would also have some elements which would encourage that.
Okay.
Fiscal prudence is something which obviously the markets would be looking at. And again, the movement of the 10-year GSEC yields definitely helped by the inclusion in the JP Morgan bond index also reiterates that we are not seeing anything which is going to be negative as far as fiscal prudence is concerned. Okay. I think the rest is all going to be more, of the same. We already had an interim budget 6 months back, and therefore our view is that the finance minister is the same, the government is the same. We don't see any major deviation in 6 months from what the government has already mentioned.
Absolutely.
You're
totally right, Sunil, because this is, after all, a revision of the interim announcements. At this stage, let me also welcome on the show Ajay Srivastava, CEO of Dimensions Consulting. But before we go across to him, one quick point, Abheek Barua, and thank you for waiting here. Before I let you go, respond to this point about fiscal prudence. What's your best guess with regard to the kind of fiscal strategy that is likely to be outlined, not just for this year, more importantly for FY26, where a sharp reduction had been earlier indicated?
I think, given everything else, I think this government has been very focused on fiscal consolidation and good fiscal management as a hallmark of their economic strategy. And I think they will indicate a preference towards moving to a long-term target of, say, 4% of GDP. And so there would be no real compromise on the fiscal consolidation path that had been set out earlier. I think it's very much part and parcel of this government's broader economic philosophy. So unless there are, a lot more pressures, etc., from partners have to be accommodated and the entire game plan changes, I don't think the fiscal philosophy changes at all.
All right, Abheek Barua, thank you very much. We'll get back to you after the budget as well. Ajay, welcome to the debate. 25 minutes left. let me come straight away to you and ask you, which are the couple of odd sectors that you feel are likely to benefit from the budget pronouncements? On the screen, you are seeing, only the FMCG sector that I noticed, which was in the green, Ajay.
I know people are expecting a lot of stuff from them to reduce the taxes at this point of time. I hope it comes through. I'm not sure whether it will actually happen, because the definition of middle class is very different from what you and I talk about and what the government wants to think and affect them. So I think we may have a discrepancy in the thinking on that part. But certainly, I think the sectors which we believe will gain or should gain, given government pronouncements, are going to be things like semiconductor. I think government has given a big go-ahead on the semiconductor part. We want to bring chips into India. It's a very unknown sector, very few companies in the market, so you don't see in the stock market. But I think that's going to be one big sector which will come through. Second sector, which we all see and have done very well in the market, is auto ancillaries and engineering, because I think the PLI there would be increased allocation, and India is doing tremendously in terms of exports to Europe and buying companies in Europe. So I think PLI in auto, PLI in electronics, PLI in semiconductors, I think are three big areas that one should really see coming through. And more important than PLI, I think we are all looking at one number, which is government borrowing. If government borrowing remains where it is right now or reduces, I think that's the best positive, because today, genuinely speaking, companies can't get credit for capex projects in this country. People may find it hard to believe, but small, medium companies are unable to fund capex anymore. Leave aside the large ones. And that, if the government borrowing is restricted, more money to the market, I think we will see a lot more action in the real market, just not in the stock market.
Ajay, Sourav here, wanted to ask you, there's been a lot of talk about how to boost employment, the jobs conundrum as well. There is also talk of whether, there have been suggestions made to the government about a possible employment-linked incentive on the lines of PLI. Do you think the government, the budget will look at tweaking some sectors, adding some sectors to the PLI itself so that it can create jobs, or do you think an ELI is also a possibility?
Well, I don't think ELI is a possibility, Sourav, because I think the government in economic survey has now led to that, at least they don't believe the narrative of that employment is an issue. Whether we agree or disagree with the numbers, that's a part. And the government officially has taken a stand that we don't have an employment problem, and we've done a decent job with employment. So that rules out ELI, in my view, both as an economic step, very difficult to implement, and a political step, because that's a clear acknowledgement what the opposition is saying. So ELI, I think, is out. PLI, yes. I think PLI government has been trying to focus upon textiles, where India has lost its leg in terms of export competitiveness. That could be a big one. Yep. The assembly of electronics, which employs people, really speaking, is nothing but screwdriver technology, as needs people. So I think PLI, yes. But definitely, sort of, ELI is going to be a political and an economic, very difficult decision to say it's an ELI plan.
That's an interesting contrast between ELI and PLI. Sunil, I'm coming to you. Right after June 4th, after the election results, we saw a shift in market preference, and therefore the question to you is, what about PSU stocks, defense, railways? We can safely expect that the allocations indicated in the interim budget will continue, might get marginally increased. Therefore, how should an investor approach these segments?
No, to be very straight about it, I think we have been believing that the sectors are good, but stocks are pricing the moon. But over the last 2-3 months, we have been going wrong, because price movement in these stocks is like being very, very firm. But we would continue to reiterate that the sectors are good, but stocks are pricing significantly, very, very high growth for a very long period of time. And therefore, on a fundamental basis, I think we would be very careful, particularly about some of the PSU defense and PSU railway names. But from an announcement perspective, I think the government is very clear. They want to focus a lot on the railway side. I think almost 25% of the capex budget goes to railways, and that's almost 2.5 lakh crore rupees. And even in the defense, this indigenization of Indian defense is a story which is going to continue for a long, long time. But at least right now, the stocks are looking very expensive.
Ajay, fertilizer stocks, sugar stocks, they've been zooming ahead of the budget. Again, is this an instance of informed investment, or are just people betting on possibilities in the budget?
I don't know, informed or not, Sourav, but over the last 20, 30 years, I have never seen them giving me any returns. So yes, sporadically they wake up and they have a nice green shoot, but return-wise, both the industries have been pathetic as far as investors are concerned. So, yes, you can plan, but the real fact is, why the fertilizer industry not good for us? Because it's a government control. Everything is government controlled. Input price, external price. Now, as an investor outside, how do I predict government behavior where we know that they are pro-farmer lobby, pass-through pricing is not going to happen? So that rules out your investment in fertilizer. Sugar is the same thing. The moment the demand goes up and the price goes up, there is a price control on the sugar, and then they say ethanol, you can't mix the ethanol. So, so if you're invested in sugar, when the best part of the season happens, there's a government control on the pricing and realization. When the worst thing happens, anyway, you got a problem on the company. So, so these two sectors, plagued by just so much of government interference, not a stable policy, is linked to CPI, linked to pricing, market pricing, stock. Ethanol has gone back and forth, should be sugar, without sugar. So, how do you invest in a thesis? And as I keep saying, there is more available on the table. It's not about I have unlimited money. If I have limited money, why would I go to a sector with so much unpredictability when there are sectors available to me which are very clear path? I think Sunil mentioned PSUs. Yes, there is a froth there, but there is a growth pattern. The valuations are cheaper. One day they may get privatized. Who knows? So I've got so much stuff lying, so many new IPOs. Look at the beautiful stories coming out in terms of engineering, in terms of new sectors, in terms of chip technologies. Why would I want to go back to the old sugar and fertilizer, no matter how they look? The world is so much more exciting with new companies.
The world is so much more exciting, and it is uncertain. Saurav, we have both Ajay and Sunil only for the next 3 or 4 minutes. I want to put both of them a question and then you step in. What will the market cheer the most? Sunil, that question to you first. Will it be a lower fiscal deficit and a continuing indication of consolidation? Or will it cheer a slightly increased capex allocation?
No, so I'll reiterate, we have had an interim budget just 6 months back. And, the budget for the capex was already increased to 11,11,000 crores. I don't think anything has happened between 1st of February to now for the government to say that there's 11,11,000 will become 12 lakh or 13 lakh crore this year. I think what the markets might like is a statement that this growth in allocation to building India is going to continue. As far as fiscal prudence is concerned, again, I think it's very natural to expect that the path towards fiscal prudence will continue. We have had a big bounty in terms of 2 lakh crores of dividend which RBI has given to the government. So even with some socialist steps, which have been talked about in the run-up to the budget, which is increasing the allocation per annum to farmers to 12,000 from 6,000 and so on and so forth. I think despite that, the market is already building in fiscal prudence. So frankly, I think, this is going to be one of the budgets where the market movements are going to be very, very small. Maybe, going back to your point, doing what has been done over the last few years and continuing in that would be the best thing to happen.
Okay, the best thing to happen. Ajay, that very same question to you as well. What will cheer the markets and what will sort of rock them in a negative way?
I think what will cheer the market when they hear there is no change in capital gains. I think that will certainly cheer the market because a lot of trepidation is sitting in the system to say that may be tweaked around. But what we're a little more worried about is not really the capital gain, but what's going to happen on the options and futures. Is there going to be a big tax coming there or some change in policy coming there either from here or RBI? Because that can change the whole dynamics of the equation in the market irrespective of fundamentals. So with the stance of...
No, but Ajay, sorry to interrupt you there. What is your position on this? Because
and I like the use of the word position.
Position on this because Sourav and I were at the venue on Friday where the SEBI chief was repeatedly asked this question and she gave pretty detailed answers to that.
In fact, she said it's becoming a macro problem, not an investor or an individual investor
and remember, last time when she had spoken, the markets had been rocked.
Yes.
So, Ajay, where do you stand on this? I'm not using the word position.
I stand on simple thing that we have got a robust capital market after a long time. Let people be mature enough to make investment decisions. If a 25-year-old can start a company, so can a 25-year-old buy a stock options or a future. Just because few of them make losses doesn't make the system wrong. The government job is to ensure regulation, checks, balances, and margins. I think to tell people that you're doing wrong economic decisions.
Okay.
Can you tell that to a startup guy with a 25-year-old comes an idea and says, give me 100 crore and I want to run a company? Investors cut a 100 crore check. Now, we are seeing on the other side that guy should not be allowed to take a decision on buying stock options worth 200 rupees or 500 rupees premium. I don't think it makes sense. I think what makes sense is people make informed decisions. You keep regulation in the market and ensure that it doesn't get into wrong hands. You stop illegal channels, illegal advisors, etc.
Right.
That's fine. Let people invest money. Risk is the basis of economic growth, and you can't take away risk from people. They'll go gamble somewhere else. That's all, as simple as that.
Sunil, before I let you go, a quick comment on that very point.
No, I think, you can argue it both the ways. I think options and futures and derivatives provide liquidity to the market, making it healthy. At the same time, I think proper education and proper checks and balances are definitely needed.
Okay.
To some extent, you can argue that, as Ajay said, that they are mature investors or mature individuals, not investors. But particularly the fact that 80-90% of the options are actually open only for half an hour to 1 hour on the day of expiry. I think that clearly points out that it is becoming a sort of a speculative or a lottery sort of a system, where you buy something for 500,000 rupees, you'll make 2,000-3,000 or you'll lose those 1,000 rupees. So maybe, there is a need for a proper education. There is need for proper checks and balances to ensure that, those who are indulging in this know what it is. In terms of investment, I think it's a good sign that so many Indian investors are finally investing for the long term. And I say for the long term because the systematic investment plan route is a clear model for long-term investing. I don't think there is anything wrong.
Okay.
And if banks are losing deposits, maybe the banks will have to get their business model right in ensuring that there's a balance between what they're offering to the investor and what the investors want.
I am so glad, Sunil, you made that point, because yesterday on India Today, I went out on a limb and said the onus should be on the banks to raise deposit rates and the government to look at how it treats the interest on fixed deposits. It's exempt only up till 10,000. Do some changes there and maybe bring parity for fixed deposits on with mutual funds. But Sunil, I know I have to let you go. Thanks very much. Try and connect to you after the budget. But Sourav, taking this point forward, State Bank of India chairman and the banker to the government of India has made this point that please reduce this differential because it is impacting deposit mobilization. Mutual fund tax treatment happened long back because it was then aimed at encouraging the mutual fund market. Is it time to encourage savers of fixed deposits, boring fixed deposits?
I think you have been harping on the word boring. So let's it's hoping that the government will look at this and make it more interesting, because it's a fact, because even leading bankers have said we are turning from a nation of savers to a nation of investors, which is right, which is good. But if you're turning from a nation of savers to a nation of speculators, that becomes a big problem. So if you want to make bank deposits more interesting, you need to bring down the differential between the deposits and mutual funds. That's a fair point.
And so if we are going to be joined by Sanjiv Puri, leading voice of industry, the chairman and managing director of ITC Ltd and the president of India's largest industrial grouping, the Confederation of Indian Industry. But even as he comes in, I wonder if Ajay is there. Ajay, do you sense some ideological sort of gambit here? If Ajay is still connected with us, can I ask him that question? Okay, we don't seem to have, we don't have Ajay. But we are also joined by Dr. Janmejaya Sinha, Chairman of Chairman India of Boston Consulting Group and Co-Chairman of CII Economic Affairs Council. Both of these industry guests joining us. Dr. Sinha, right, 10 minutes left. What is your biggest ask from this budget that you hope Modi 3.0 delivers on?
You know, I want to be boring. You know, if you go for an operation, what you want the doctor to come back and say is that it was uneventful, it was successful, and the patient is doing well. That's all that I want. I want a continuity of the policies that we have had, a tightening, you know, conservatism with fiscal deficits, you know, with consistency with tax, you know, looking at tariffs and continuing to spend on infrastructure. These are my expectations and wishes. I have a hope which may go unrequited, but it is on a focus on water, which I wish starts to get the attention it deserves, because it will help in a number of areas with agriculture and other places, but also the fact that we consume 1/3 of the what the G7 consumes in water and below what the overall world average is, and it's going to get worse. So water requires desperate attention.
Dr. Sinha,
that would be my
Dr.
wish,
Sinha, we are also joined by Sanjiv Puri, because just around 8 to 9 minutes left. Sanjiv Puri, the FMCG sector seems to be the only one. Sanjiv Puri, if you can hear me, this is Siddharth Zarabi from the Business Today studios. The FMCG sector seems to be the only one in the green at the moment. From your point of view as CII, are you hoping that this budget delivers an impetus to consumption, particularly rural consumption?
So, you see, let me answer it in two parts. You know, first of all, I think this whole economic transformation that is happening, and you're seeing the growth in the economy, jobs are getting created. So this is no doubt going to have a positive effect on all sectors of the economy. So we're looking at, as my colleague just said, we're looking at continuity there. We're looking at building on the good work of reforms that's happened in the past. The idea is really to look at some other sectors that can deal with higher, labor intensity, be it apparel, toys, tourism, wood related. The idea is to also look at the next set of reforms so that and a lot of that actually fall towards the state. So how can we kind of build a consensus around that so that further acceleration in the growth momentum can be looked at. So that's really one part of it. I think the part what my colleague was alluding to it. The second is, I think, and to some degree, I would say a bit to provide some relief to the middle class, maybe by way of income tax at the lower end, by way of certain enhancement in the amounts that are done through either Manrega or other direct benefit transfer mechanisms, to provide some, a bit of relief at that end. So really, two parts of it. And when we are talking of the relief, I would say that a lot more focus on rural, maybe as we are talking about public capex, higher indexation towards rural. These would be the important factors that we would look at. Having said that, we also need to address the risks in the economy, which is really to do with extreme weather events.
Yes.
Again, my colleague spoke about water. We do need to address that. We need to deal with adaptation on a larger way, because extreme weather events are multiplying and they pose risks to agriculture, they pose risks to economic activities. So broadly, I think these would be the areas which largely reflect most of it, continuity of what's happened in the past, that will build the momentum and will be good for all sectors of the economy.
Mr. Puri, Sourav here. You spoke about jobs, but the economic survey yesterday has also outlined AI as a positive and yet a negative in terms of what it can do in terms of losses for jobs. How is corporate India, particularly organizations like yours, CII, how are they looking at it? Because that again can lead to an exacerbation of the demand conundrum, right? So how is this whole AI debate? What is the corporate India stand on that?
See, let me just add to that. Just like AI, I also think energy transition has its risks also.
because there needs to be a systems transition. When we talk about any of the sectors like the energy sector, there has to be a systems transition. When we talk about EV, it's a whole system that is transitioning. So all of these do pose, they have their pluses and they do have their risks. Similarly, AI. Now, I think we have to devise our roadmaps to leverage AI and make it an advantage for India, because India has a demographic talent to be the powerhouse of AI for the whole world. And similarly, we need to design our pathways for the transition so that at a larger level we benefit from it, and rather than get impacted by the risks associated with it. So just like AI, I think similarly we also need to look at the systems transition carefully as far as energy transition is concerned, for example.
Dr. Sinha, one of the points that the economic survey made was the rise in corporate profitability pre-COVID and at present, at almost 4 times up in PBT terms. And government policy makers say that the issue of consumption is also to do with rising prices. Is that a fair point according to you?
It's a very good thing that the corporate sector profitability has risen and that the banks are in good shape. The fact that prices are rising, are they rising ahead of inflation, and to what extent? Actually, there have been advantage. This is an advantage. A strong corporate sector is an advantage. And once the capacity utilization start to rise, and there is a lot of interest already, capex spending starts with it. So I don't think we should minutely go into our prices rising. That's the kind of micromanagement that the economy does not require. We should be happy with the strength of our corporate sector right now.
Okay, we should be happy. I completely agree with that. And remember 2019 when corporate India got a big tax break. Less than 3 minutes left for the official start. Parliament is a far more combative place, Sourav, these days. And we saw that even during Prime Minister Modi's reply to the President's speech, and Prime Minister Modi reflected on that as well.
Yesterday.
And I think the broader political economy impulse, Sourav, for this budget and beyond that, and our lawmaking, including economic policies, will be the government versus opposition face-off. So I'm hoping that at least the budget speech is listened to carefully, that it does not get...
Also, Siddharth, the interesting point is, while Dr. Sinha and others say that, normal is boring, but normal is what they expect. Let's have continuity. Let's have the, way forward for reform. It's also important that the Prime Minister has emphasized and that this will be a budget which will set out the path for Viksit Bharat. So we will have to see what are those 5 or 6, and in fact the economic survey yesterday spoke of 6 key areas, including MSMEs and the rest of it, where they need to really focus on. So I'll be very keen to see what are those 6 areas and whether the budget touches upon them and how.
Dr. Puri, Mr. Puri, just one quick point as President of CII to you, sir. This whole debate around private sector investment not picking up, although there are signs and data that seem to suggest that is happening. What is your view? Is private sector investment now on a takeoff path and capacity utilizations improving?
Absolutely, and that's why you're seeing investment in the private sector. We are seeing that the investment rate is now higher than what it was pre-COVID. And what we are also hearing from the internal surveys that CII does amongst members, that capacity utilizations are at 75% or thereabouts, which are the tipping points where fresh investment starts to happen. And I think the general survey is optimistic, so I think investments will happen. But I think given the number of jobs that we have to create and the opportunity in the Indian economy, I think more needs to be done, and to unlock that, we're really looking forward to the next set of policy interventions, reforms in agriculture, a lot of reforms at the state level, so that the next set of potential in the economy is kind of unleashed, and the economy gets even more competitive than it is today.
Dr. Sinha, even as I come to you, I'll request my producers to try and bring us live visuals from Parliament as they come in, where the Finance Minister gets ready to speak. But Dr. Sinha, this is going to be a unique opportunity, the first full budget of any government, to lay out a very broad economic vision and strategy. What would you like to hear from the Finance Minister as far as the overall vision is concerned?
So I would like the Finance Minister to continue with fiscal conservatism, but be expansive with the social sector, to double down on investments in skilling and education, embedding it with technology, doing the same with healthcare, and looking at some of the environmental threats that are coming with a focus on water. And I would also like to see the building of the middle with the SME. You know, we have the SME and then we have the ME, you know, and we need the middle. And so any skilling, etc., which even the economic survey talks about, will be very good. But the one thing that the economic survey has said, which has delighted me, has been that the government should do less but do it better in the states. And that is a really welcome thing coming in the economic
survey. On the screens for you viewers is Lok Sabha Speaker Om Birla. Let's try and get that audio up even as we speak. And we'll try and continue this till the moment the Finance Minister stands up. Sourav, this is the formal part of it. And very clearly, for the markets, we've heard a host of experts say, please don't rock the boat. Corporate India is also saying the same message. You've already given us a message in the interim budget. We believe in you. You've been fiscally conservative. Would there be anything, Sourav, which might spoil the mood terribly according to you?
You know, I think, you know, this whole discussion around markets, F&O, if you really put some kind of a really prohibitive tax on markets, then that will really rock the boat. If fiscal conservatism is deviated from, which I think is a very unlikely, you know, possibility, because the government has really pushed its might behind it. So I think this is the first time I am seeing a chorus of let's have it normal. Let's have it continue.
No one's mentioned dream budget. No one is saying,
there are
make
expectations. You know, I remember Dr. Bimal Jalan, the RBI governor, famously said his job was to manage expectations. I think expectations have been beautifully managed.
Mr. Puri, some foreign visiting dignitaries are being introduced by the Lok Sabha Speaker. That gives me perhaps another 30 odd seconds with you. You know, the whole 10 years of Modinomics has been big bang structural reforms in the first 5 years, followed by supply side interventions and the management of COVID. What should be the big third term strategy according to you, if you were to put it into a few words?
Okay, besides building on what is already being done, I think we have to look at the next set of factor reforms, agriculture, power, land, labor, which are of course something that where states need to do a lot more. So that's one important area to look at. The other area to look at is really...
Okay, the Finance Minister is up and speaking. Let's listen in.
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic third term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age, make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I'm happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Viksit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework, about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Priority 1, productivity and resilience in agriculture, transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oilseeds. For achieving self-sufficiency in pulses and oilseeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oilseeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing, and export will be facilitated through NABARD. National cooperation policy. Our government will bring out a national cooperation policy for systematic, orderly, and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Participation of women in the workforce. We will facilitate higher participation of women in the workforce through setting up of working women hostels in collaboration with industry and establishing creches. In addition, the partnership will seek to organize women-specific skilling programs and promotion of market access for women SHG enterprises. Skilling program. I'm happy to announce a new centrally sponsored scheme as the 4th scheme under the Prime Minister's package for skilling in collaboration with state governments and industry. 20 lakh youth will be skilled over a 5-year period. Thousand industrial training institutes will be upgraded in hub and spoke arrangements with outcome orientation. Course content and design will be aligned to the skill needs of industry, and new courses will be introduced for emerging needs. Skilling loans. The model skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans. For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. Priority 3, inclusive human resource development and social justice, saturation approach. Our government is committed to all-round, all-pervasive, and all-inclusive development of people, particularly farmers, youth, women, and the poor. For achieving social justice comprehensively, the saturation approach of covering all eligible people through various programs, including those for education and health, will be adopted to empower them by improving their capabilities. Implementation of schemes meant for supporting economic activities by craftsmen, artisans, self-help groups, scheduled caste, scheduled tribe, and women entrepreneurs and street vendors such as the PM Vishwakarma, PM Swanidhi, National Livelihood Missions, and Stand Up India will be stepped up. Purvodaya. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha, and Andhra Pradesh. This will cover human resource development, infrastructure, and generation of economic opportunities to make the region an engine to attain Viksit Bharat. On the Amritsar-Kolkata industrial corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be a good model for developing our ancient centers of cultural importance into future centers of modern economy. This model shall showcase Vikas B, Virasat B in our growth trajectory. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Act, Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. Women-led development. For promoting women-led development, the budget carries an allocation of more than 3 lakh crore for schemes benefiting women and girls. This signals our government's commitment for enhancing women's role in economic development. Pradhan Mantri Janjatiya Unnat Gram Abhiyan. For improving the socio-economic condition of tribal communities, we will launch the Pradhan Mantri Janjatiya Unnat Gram Abhiyan by adopting saturation coverage for tribal families in tribal majority villages and aspirational districts. This will cover 63,000 villages, benefiting 5 crore tribal people. Bank branches in northeastern region. More than 100 branches of India Post Payment Bank will be set up in the northeast region to expand the banking services. This year, I have made a provision of 2.66 lakh crore rupees for rural development, including rural infrastructure. Priority 4, manufacturing and services, support for promotion of MSMEs. This budget provides special attention to MSMEs and manufacturing, particularly labor-intensive manufacturing. We have formulated a package covering financing, regulatory changes, and technology support for MSMEs to help them grow and also compete globally, as mentioned in the interim budget. I'm happy to announce the following specific measures. Credit guarantee scheme for MSMEs in the manufacturing sector. For facilitating term loans to MSMEs for purchase of machinery and equipment without collateral or third-party guarantee, a credit guarantee scheme will be introduced. The scheme will operate on pooling of credit risks of such MSMEs. A separately constituted self-financing guarantee fund will provide to each applicant guarantee cover up to 100 crore rupees, while the loan amount may be larger. The borrower will have to provide an upfront guarantee fee and an annual guarantee fee on the reducing loan balance. New assessment model for MSME credit. Public sector banks will build their own in-house capability to assess MSMEs for credit instead of relying on external assessment. They will also take a lead in developing or getting developed a new credit assessment model based on the scoring of digital footprints of the MSMEs in the economy. This is expected to be a significant improvement over the traditional assessment of credit eligibility based only on asset or turnover criteria. That will also cover MSMEs without a formal accounting system. Credit support to MSMEs during stress period. I'm happy to announce a new mechanism for facilitating continuation of bank credit to MSMEs during their stress period while being in special mention account, SMA stage, for reasons beyond their control. MSMEs need credit to continue their business and to avoid getting into the NPA stage. Credit availability will be supported through a guarantee from a government-promoted fund. Mudra loans. The limit of Mudra loans will be enhanced to 20 lakh from the current 10 lakh for those entrepreneurs who have availed and successfully repaid previous loans under the Tarun category. Enhanced scope for mandatory onboarding in trades. For facilitating MSMEs to unlock their working capital by converting their trade receivables into cash, I propose to reduce the turnover threshold of buyers for mandatory onboarding on the trades platform from rupees 500 crore to 250 crore rupees. This measure will bring 22 more CPSCs and 7,000 more companies onto the platform. Medium enterprises will also be included in the scope of the suppliers. SIDBI branches in MSME clusters. SIDBI will open new branches to expand its reach to serve all major MSME clusters within 3 years and provide direct credit to them. With the opening of 24 such branches this year, the service coverage will expand to 168 out of 242 major clusters. MSME units for food irradiation, quality and safety testing. Financial support for setting up of 50 multi-product food irradiation units in the MSME sector will be provided. Setting up of 100 food quality and safety testing labs with NABL accreditation will be facilitated. E-commerce export hubs. To enable MSMEs and traditional artisans to sell their products in international markets, e-commerce export hubs will be set up in public-private partnership mode. These hubs, under a seamless regulatory and logistic framework, will facilitate trade and export-related services under one roof. Measures for promotion of manufacturing and services. Internship in top companies. As the fifth scheme under Prime Minister's package, our government will launch a comprehensive scheme for providing internship opportunities in 500 top companies to 1 crore youth in 5 years. They will gain exposure for 12 months to real-life business environment, varied professions, and employment opportunities. An internship allowance of 5,000 per month, 5,000 rupees per month, along with a one-time assistance of 6,000 rupees will be provided. Companies will be expected to bear the training cost and 10% of their internship cost from their CSR funds. Industrial parks. Our government will facilitate development of investment-ready, plug-and-play industrial parks with complete infrastructure in or near 100 cities in partnership with the states and private sector by better using town planning schemes. 12 industrial parks under the National Industrial Corridor Development Program also will be sanctioned.
Veggie paper, no. Please, petty.
Rental housing with dormitory type accommodation for industrial workers will be, just 1 minute. Rental housing, I repeat, rental housing with dormitory type accommodation for industrial workers will be facilitated in PPP mode with VGF support and commitment from anchor industries. Shipping industry, ownership, leasing and flagging reforms will be implemented to improve the share of Indian shipping industry and generate more employment. Critical mineral mission. We will set up a critical mineral mission for domestic production, recycling of critical minerals and overseas acquisition of critical mineral assets. Its mandate will include technology development, skilled workforce, extended producer responsibility framework, and a suitable financing mechanism. Offshore mining of minerals. Our government will launch the auction of the first tranche of offshore blocks for mining, building on the exploration already carried out. Digital public infrastructure applications. Turning to the services sector, I propose development of DPI applications at population scale for productivity gains, business opportunities, and innovation by the private sector. These are planned in the areas of credit, e-commerce, education, health, law and justice, logistics, MSME service delivery, and urban governance. Integrated technology platform for IBC ecosystem. An integrated technology platform will be set up for improving the outcomes under the Insolvency Bankruptcy Code for achieving consistency, transparency, timely processing, and better oversight for all stakeholders. Voluntary closure of LLPs. The services of the Center for Processing Accelerated Corporate Exit, CPACE, will be extended for voluntary closure of LLPs to reduce the closure times. National Company Law Tribunals. The IBC has resolved more than 1,000 companies, resulting in direct recovery of 3.3 lakh crore to creditors. 3.3 lakh crore rupees to creditors. In addition, 28,000 cases involving over 10 lakh crore rupees have been disposed of even prior to admission. Appropriate changes to the IBC, reforms and strengthening of the tribunal and appellate tribunals will be initiated to speed up insolvency resolution. Additional tribunals will be established. Out of those, some will be notified to decide cases exclusively under the Companies Act. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5, urban development. Cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Creative redevelopment of cities. For creative brownfield redevelopment of existing cities with a transformative impact, our government will formulate a framework for enabling policies, market-based mechanisms, and regulation. Transit-oriented development. Transit-oriented development plans for 14 large cities with a population above 30 lakh will be formulated, along with an implementation and financing strategy. Urban housing. Under the PM Awas Yojana, Urban 2.0, housing needs of 1 crore urban poor and middle-class families will be addressed with an investment of 10 lakh crore rupees. This will include the central assistance of 2.2 lakh crore rupees in the next 5 years. A provision of interest subsidy to facilitate loans at affordable rates is also envisaged. In addition, enabling policies and regulations for efficient and transparent rental housing markets with enhanced availability will also be put in place. Water supply and sanitation. In partnership with state governments and multilateral development banks, we will promote water supply, sewage treatments, and solid waste management projects and services for 100 large cities through bankable projects. These projects will also envisage use of treated water for irrigation and filling up of tanks in nearby areas. Street markets. Building on the success of PM Swanidhi scheme in transforming the lives of street vendors, our government envisions a scheme to support each year over the next 5 years the development of 100 weekly hearts or street food hubs in select cities. Stamp duty. We will encourage states which continue to charge high stamp duty to moderate the rates for all and also consider further lowering duties for properties purchased by women. This reform will be made an essential component of urban development schemes. Priority 6, energy security, energy transition. In the interim budget, I had announced our strategy to sustain high and more resource efficient economic growth, along with the energy security in terms of availability, accessibility, and affordability. We will bring out a policy document on appropriate energy transition pathways that balances the imperatives of employment, growth, and environmental sustainability. PM Surya Ghar Muft Bijli Yojana. PM Surya Ghar Muft Bijli Yojana. In line with the announcement in the interim budget, PM Surya Ghar Muft Bijli Yojana has been launched to install rooftop solar plants to enable 1 crore households obtain free electricity up to 300 units every month. The scheme has generated remarkable response with more than 1.28 crore registrations and 14 lakh applications, and we will further encourage it. Pumped storage policy. A policy for promoting pumped storage projects will be brought out for electricity storage and facilitating smooth integration of the growing share of renewable energy with its variable and intermittent nature in the overall energy mix. Research and development of small and modular nuclear reactors. Nuclear energy is expected to form a very significant part of the energy mix for Viksit Bharat. Towards that pursuit, our government will partner with the private sector for 1. setting up Bharat Small Reactors. 2. Research and development of Bharat Small Modular Reactor. And 3. Research and development of newer technologies for nuclear energy. The R&D funding announced in the interim budget will be made available for this sector also. Advanced ultra supercritical thermal power plants. The development of indigenous technology for advanced ultra supercritical thermal power plants with much higher efficiency has been completed. A joint venture between NTPC and BHEL will set up a full-scale 800 megawatt commercial plant using AUSC technology. The government will provide the required fiscal support. Moving forward, development of indigenous capacity for the production of high-grade steel and other advanced metallurgy materials for these plants will result in strong spin-off benefits for the economy. Roadmap for hard-to-abate industries. A roadmap for moving the hard-to-abate industries from energy efficiency targets to emission targets will be formulated. Appropriate regulations for transition of these industries from the current perform, achieve, and trade mode to Indian carbon market mode will be put in place. Support to traditional micro and small industries. An investment-grade energy audit of traditional micro and small industries in 60 clusters, including brass and ceramic, will be facilitated. Financial support will be provided for shifting them to cleaner forms of energy and implementation of energy efficiency measures. The scheme will be replicated in another 100 clusters in the next phase. Priority 7, infrastructure investment by central government. Significant investment the central government has made over the years in building and improving infrastructure has had a strong multiplier effect on the economy. We will endeavor to maintain strong fiscal support for infrastructure over the next 5 years in conjunction with imperatives of other priorities and fiscal consolidation. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Private investment in infrastructure. Investment in infrastructure by private sector will be promoted through viability gap funding and enabling policies and regulations. A market-based financing framework will be brought out. Pradhan Mantri Gram Sadak Yojana, Phase 4 of the PMGSY will be launched to provide all-weather connectivity to 25,000 rural habitations, which have become eligible in view of their population increase. Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Tourism has always been a part of our civilization. Our efforts in positioning India as a global tourist destination will also create jobs, stimulate investments, and unlock economic opportunities for other sectors. In addition to the measures outlined in the interim budget, I propose the following measures. Vishnupad Temple at Gaya and Mahabodhi Temple at Bodh Gaya in Bihar are of immense spiritual significance. Comprehensive development of Vishnupad Temple Corridor and Mahabodhi Temple Corridor will be supported, modeled on the successful Kashi Vishwanath Temple Corridor to transform them into world-class pilgrim and tourist destinations. Rajgir holds immense religious significance for Hindus, Buddhists and Jains. The 20th Tirthankara Muniswarata temple in the Jain temple complex is ancient. The Saptarishi or the 7 hot springs form a warm water Brahmkund that is sacred. A comprehensive development initiative for Rajgir will be undertaken. Our government will support the development of Nalanda as a tourist center, besides reviving Nalanda University to its glorious stature. Odisha's scenic beauty, temples, monuments, craftsmanship, wildlife sanctuaries, natural landscapes, and pristine beaches make it an ultimate tourism destination. Our government will provide assistance for their development to Odisha as well. Priority 8, innovation, research and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector-driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Effective implementation of several of these reforms requires collaboration between the center and the states, and building consensus as development of the country lies in development of the states. For promoting competitive federalism and incentivizing states for faster implementation of reforms, I propose to earmark a significant part of the 50-year interest-free loan. Working with the states, we will initiate the following reforms. Land-related reforms and actions, both in the rural and urban areas, will cover land administration, will cover 1. Land administration, planning and management, and 2. Urban planning usage and building bylaws. These will be incentivized for completion within the next 3 years through appropriate fiscal support. Rural land-related actions. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhaar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land-related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. Labor-related reforms. Services to labor. Our government will facilitate the provision of a wide array of services to labor, including those for employment and skilling. A comprehensive integration of eShram portal with other portals will facilitate such one-stop solution. Open architecture databases for the rapidly changing labor market, skill requirements, and available job roles, and a mechanism to connect job aspirants with potential employers and skill providers will be covered in these services. Shram Suvidha and Samadhan portal. Shram Suvidha and Samadhan portal will be revamped to enhance ease of compliance for industry and trade. Capital and entrepreneurship related reforms, financial sector vision and strategy. For meeting financing needs of the economy, our government will bring out a financial sector vision and strategy document to prepare the sector in terms of size, capacity, and skills. This will set the agenda for the next 5 years and guide the work of the government, regulators, financial institutions, and market participants. Taxonomy for climate finance. We will develop taxonomy for climate finance for enhancing the availability of capital for climate adaptation and mitigation. This will support achievement of the country's climate commitments and green transition. Variable capital company structure. We will seek the required legislative approval for providing an efficient and flexible mode for financing leasing of aircrafts and ships and pooled funds of private equity through a variable company structure. Foreign direct investments and overseas investment. The rules and regulations for foreign direct investment and overseas investments will be simplified to 1. Facilitate foreign direct investments, 2. Nudge prioritization, and 3. Promote opportunities for using Indian rupee as a currency for overseas investment. NPS Vatsalya. NPS Vatsalya, a plan for contribution by parents and guardians for minors, will be started. On attaining the age of majority, the plan can be converted seamlessly into a normal NPS account. Use of technology. We have successfully used technology for improving productivity and bridging inequality in our economy during the past 10 years. Public investment in digital infrastructure and innovations by the private sector have helped in improving access of all citizens, particularly the common people, to market resources, education, health and services. We will step up adoption of technology towards digitalization of the economy. Ease of doing business. For enhancing ease of doing business, we are already working on the Jan Vishwas Bill 2.0. Further, states will be incentivized for implementation of the business reforms, action plans, and digitalization. Data and statistics. For improving data governance, collection, processing and management of data and statistics, different sectoral databases, including those established under the Digital India Mission, will be utilized with active use of technology tools. New pension scheme. The committee to review the NPS has made considerable progress in its work. I'm happy that the staff side of the National Council of the Joint Consultative Machinery for Central Government Employees has taken a constructive approach. A solution will be evolved which addresses the relevant issues while maintaining fiscal prudence to protect the common citizens. Budget estimates for 24-25. For the year 24-25, total receipts other than borrowings and the total expenditure are estimated at 32.07 lakh crore rupees and 48.21 lakh crore rupees respectively. The net tax receipts are estimated at 25.83 lakh crore rupees. The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year. The government is committed to staying the course. From 2026-27 onwards, our endeavor will be to keep the fiscal deficit each year such that the central government's debt will be on a declining path as percentage of GDP. I will now move to Part B. Indirect taxes. Sir, I start with GST. It has decreased tax incidence on the common man, reduced compliance burden and logistics cost for trade and industry, and enhanced revenues of the central and the state governments. It is a success of vast proportions. To multiply the benefits of GST, we will strive to further simplify and rationalize the tax structure and endeavor to expand it to the remaining sectors. My proposals for customs duties intend to support domestic manufacturing, deepen local value addition, promote export competitiveness, and simplify taxation while keeping the interest of the general public and consumers surmount. In Budget 22-23, we reduced the number of customs duty rates. I propose to undertake a comprehensive review of the rate structure over the next 6 months to rationalize and simplify it for ease of trade, removal of duty inversion, and reduction of disputes. I shall now take up sector-specific customs duty proposals. Medicine and medical equipments. To provide relief to cancer patients, I propose to fully exempt 3 more medicines from customs duties. I also propose changes in the BCD on X-ray tubes and flat panel detectors for use in medical X-ray machines under the phased manufacturing program so as to synchronize them with the domestic capacity addition. Mobile phone and related parts. With a 3-fold increase in domestic production and almost a 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%. Critical minerals. Minerals such as lithium, copper, cobalt, and rare earth elements are critical for sectors like nuclear energy, renewable energy, space, defense, telecommunications, and high-tech electronics. I propose to fully exempt customs duties on 25 critical minerals and reduce BCD on 2 of them. This will provide a major fillip to the processing and refining of such minerals and help secure their availability for these strategic and important sectors. Solar energy. Energy transition is critical in the fight against climate change. To support energy transition, I propose to expand the list of exempted capital goods for use in the manufacture of solar cells and panels in the country. Further, in view of sufficient domestic manufacturing capacity of solar gas, glass, and tinned copper interconnect, I propose not to extend the exemption of custom duties provided to them. Marine products. India's seafood exports in the last financial year touched an all-time high of more than 60,000 crores of rupees. Frozen shrimp accounted for about 2/3 of these exports. To enhance their competitiveness, I propose to reduce BCD on certain broodstock, polychaete worms, shrimp, and fish feed to 5%. I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed. Leather and textile. Similarly, to enhance the competitiveness of exports in the leather and textile sectors, I propose to reduce BCD on real down-filling material from duck or goose. I am also making additions to the list of exempted goods for manufacture of leather and textile garments, footwear, and other leather articles for export. To rectify inversion in duty, I propose to reduce BCD subject to conditions on methylene diphenyl diisocyanate MDI for manufacture of spandex yarn from 7.5 to 5%. Furthermore, the export duty structure on raw hides, skin, and leather is proposed to be simplified and rationalized. Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%. Other metals, steel and copper are important raw materials. To reduce their cost of production, I propose to remove the BCD on ferronickel and blister copper. I am also continuing with nil BCD on ferrous scrap and nickel cathode and concessional BCD of 2.5% on copper scrap. Electronics. To increase value addition in the domestic electronics industry, I propose to remove the BCD subject to conditions on oxygen-free copper for manufacture of resistors. I also propose to exempt certain parts for manufacture of connectors. Chemicals and petrochemicals. To support existing and new capacities in the pipeline, I propose to increase the BCD on ammonium nitrate from 7.5% to 10%. Plastics. PVC flex banners are non-biodegradable and hazardous for environment and health. To curb their imports, I propose to raise the BCD on them from 10 to 25%. Telecommunication equipment. To incentivize domestic manufacturing, I propose to increase the BCD from 10 to 15% on PCBA of specified telecom equipment. Trade facilitation. To promote domestic aviation and boat and ship MRO, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. I'll read that again. To promote domestic aviation and boat and ship maintenance, repair and operations, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. In the same vein, I propose to extend the time limit for re-import of goods for repairs under warranty from 3 to 5 years. I now move to direct taxes. We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the finance bill by simplifying the tax regime for charities, tedious rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and TDS. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% TDS rate on many payments is being merged into the 2% TDS rate, and the 20% TDS rate on repurchase of units by mutual funds or UTI is being withdrawn. TDS rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize delay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for TDS defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending in appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise, and service tax in the tax tribunals, high courts, and Supreme Court to 60 lakh rupees, 2 crore rupees, and 5 crore respectively, with a view to reduce litigation and provide certainty in international taxation. We will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing a simpler tax regime for foreign shipping companies operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals. To improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks, and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the Benami Transaction Prohibition Act 1988. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
Well, that was the first budget of Prime Minister Narendra Modi's third term, and income tax changes announced, but income tax changes for the salaried, personal income tax, and for the markets, two different sets of decisions. The first big key takeaway, the government has finally done some changes as far as slab rates are concerned and standard deduction in the income tax regime, but that is applicable only to the new tax regime, which is the zero exemption regime. On the other hand, capital gains tax for markets have been changed, and that has led to a sharp cut on the markets. I have with me Sourav Majumdar, editor of Business Today, and our chief markets editor, Shailendra Bhatnagar. Shail, I'll come to you for a quick take on what's happening with the markets as the finance minister has announced those tax changes.
Well, Siddharth, after a 2,000-point rally in the last 7 trading weeks, we've seen lots of profit booking happening, and the worst that the market was expecting, hoping that it would never happen, has come in place. Long-term capital gains tax has been increased to 12.5% versus 10%. Short-term capital gains tax has been risen to 20% versus 15% earlier. And to curb F&O speculation, the securities transaction tax has been doubled to 0.02%. Nifty down 1.3%. Sensex has shed 831 points. Nifty Bank is 500 points lower. And across the board, you see a very sharp sell-off happening, especially in the small cap index, now down 2.7%, about 500 points lower.
Shail, if we go through some of the sectors, let's